You guys have been following this. You don't need me to tell you that this private credit is the 2026 version of subprime. BlackRock is coming out and saying a lot of these loans, they're having to value at zero cents on the dollar, when 3 months ago they were at 100 cents on the dollar. Decoupling of the price of oil and interest rates. And he's saying this as Blue Owl is coming out and admitting that their redemption requests in the one fund have gone up to, look at this, guys, 21.9%. Now, they're not allowing those redemptions because they'd have to fire sell assets, and at a certain point the engine freezes. And that's the exact same thing that happens with the financial economy. Hello, fellow Rebel Capitalist Substack subscribers. Hope you guys are doing extremely well. Happy Easter. Happy holiday weekend. There's a lot to talk about, even though it's a holiday. And this week, what I am most focused on is the interplay between interest rates and the price of oil. I think we may have mentioned that last week, but we're seeing it play out this week again. And it's a completely opposite, or the complete opposite, excuse me, of what we saw at the beginning of this crisis, quite frankly, in the Middle East. And I think it pertains directly to private credit. I think that pertains directly to the financial economy, which you guys know from watching my videos, directly is I shouldn't say that. I should say the real economy is a derivative of the financial economy. I was going to say the financial economy is a derivative of the real economy. That's what it should be. But in the reality that we live in, unfortunately, I think the real economy is a derivative of the financial economy. Therefore, if we're seeing strains in the financial economy, then that tells us what we should expect to play out in the real economy. Although let's remember, we had a pretty good jobs number. We got to take the good with the bad. We've got to analyze everything. Can't just cherry pick the bad stuff if we're bearish, or cherry pick the good stuff if we're bullish. So I think that's probably the best place to start is the old